Welcome everyone, my name is Pat Mitchell. I've been a trader for the past 11 years, and in this video I'm going to show you exactly how to day trade options with ease. This is going to be a very drilled down, concise video showing you exactly how to price your option, meaning pick the strike price, pick the expiry, how to set up a trade plan, and then finally how to execute that trade via options. And you're going to see just how simple it can be. So give me 1 sec. I'm going to fire up these charts and we are going to get right into it. Okay, so now that we are into the charts and we're going to get right into this here, you're going to see SPY. Now, I generally day trade options on SPY and Qs, but you can basically do this, what I'm about to show you, on any stock that options are provided. Now, first off, what we're going to do, and I'm going to explain what is on my screen so then you guys understand. I always use a daily chart. I use the 1 minute chart, and then I have my level 2 and my options chain, and then a chart that I use for entries. Now, it's important to note that I don't consider myself an options trader. I am a stock trader that executes via options, and it's different. I don't use the Greeks. I don't use any of that because I'm in these trades very quickly in and out within, executing from time of execution, meaning entering my trade till the time I exit. It's maybe 15 to 30 minutes maximum, and sometimes as little as 5 to 10 minutes. So things like theta, which is your meltdown of that premium, and we'll go over all this, it doesn't really come into play. I'm not holding these trades long enough in order for it to matter. So it's a very basic strategy. So first, before we go over how to enter, let's develop a trading strategy, trade plans for the morning. Now, I'm going to draw out some levels, and let's say we are looking to go long coming into this level here and short into this level here. So I will always refer to going long and going short because, like I said, I am a stock trader that just executes via options. So you would buy calls here where my cursor is to go long and puts here to go short. That's really the only difference that you're going to find here. Everything else is exactly normal as to entering long and entering short. So the trade plan is going to be as follows. So at the open, so once the market opens, if we sell off, we come down into this level here, I am going to go long. And then at the open, if we come up, we come racing on up into this level here, I will go short. That's it. That's as simple as a strategy can get. I am a technical trader. I'm looking to go long into support and short into resistance. So now that we got that out of the way, let's take a look at the levels that we are executing, because this is how we're going to price our option, meaning choosing our strike. So up here we have 585.56 for puts or for the short. Now, a lot of people will choose the 584s, 583s. They'll go near the money. I don't want that. I want in the money right into that level. Whatever this level is, I want to choose the closest strike price. So you can take a look at it, and the closest strike price is 585 or 586 puts. Now, what a lot of traders don't do and take into consideration is their risk. So if this comes up into this level, I'm not looking to get out just because it barely breaks that level. We need to apply some sort of risk. So for the sake of this video, let's apply a technical risk right there. So your risk on this is 586.26. This is where if it comes up, doesn't just hit it, it needs to break it on confirmation. So it makes a high, next candle, it wants to keep going, you have to get out. So you're looking somewhere in the neighborhood of like 586.40, 586.50, where you would actually stop out. Remember, as traders, we always need to take into consideration our risk and our stop out. So we don't want to go with the 585 strikes. Why? Because if you enter and it does come all the way up here, you're really far away from where you need to get this stock to come down to in order to be basically profitable. I don't want that. I want to be profitable almost immediately. So what we want to do here, let me clean some of this up, is choose a strike price that makes sense with my risk taken into consideration. And that would be the 586s. So I'm going to mark that up here, and that's going to come in handy in a few minutes. So 586 puts. Now let's price out that long. So if we come racing down and we take a look at our level, we have a stock price of 583.40. So same thing, just reverse. On the long, I don't want to go with the 584s way up here. I don't want that. It would probably be acceptable, but we need to think about our risk. So let's say our risk is somewhere here. That's where our stop is going to be. Okay. So that price point there is 582.90. So essentially the closest strike price to our risk is 583. And that's what we would choose here. We would choose the 583 calls. So this here is to go short. This here is to go long. So now let's go over to our level 2 where we input our orders. So we first want to make sure SPY is on here, which it is, but let's go over it. So you would double click that, hit SPY. There you go. We have SPY. And this right here is the stock, and this is joined to my options chain. So the options chain is going to give you all of your expiry dates and then your strike prices down here. So let's get our calls ready first. So we need to find the 583 calls. So let's scroll down until we find 583. 583. Double click on that, and it is in here, the 583 calls. Now, what I like to do, just so then in the heat of the moment, I can switch gears if I have to and choose puts if I have to. That is the 586s, and I just highlight it. So the 586 puts is if we want to go short, and the 583 calls is if we want to go long, just like we would on a stock. So now we have that entered into our order manager or level 2. Now let's choose how many contracts we should. Now remember guys, one contract that you are going to purchase is the equivalent to 100 shares. So if you're trading 10 contracts, that's the equivalent to 1,000 shares of SPY. So to take this one step further to really put sizing into perspective, because it's extremely important, let me pull in a calculator. So let's say you think that, oh, I want to take 40 contracts. That sounds about right. So 40 times 100 equals 4,000. Now you have to ask yourself, at that price point, would you execute SPY, the stock, with 4,000 shares? And maybe some of you don't know because you've never really done the math on how much money and how much capital that would normally take. So let's times that by 583.40. That's a $2.3 million position on the stock. Now, most of you wouldn't do that, right? So really, if you're just learning, you really should be looking at going no larger than 20 contracts. And right at the beginning, you should be sizing appropriately with 1 to 5 contracts until you get your feet under you. And that's why my sizing program, the Size Up, Trick Trade Size Up program, is so important. It's included in membership. And I lay out the blueprint for sizing, and you can't size up until you meet certain criteria, which helps you with your trading. That's why my members are so successful. So when we're sizing these, let's go with 10 contracts. Okay, so now we're ready to execute the 583 calls, or essentially we're looking to go long into this level here on SPY stock. So as it comes down, so market opens up. I'm going to clean this up. One sec, guys. Okay. So market opens up and it starts making its way down. As it's coming down into that level, you are just going to simply, since you've already got everything inputted, hit buy. That's it. That's all you have to do. So you hit buy, comes down, it pops up. As it pops up, now what do? Are you allowed to sell them right away? Yes, of course you are. Now, the one thing I didn't cover is expiry. I always trade 0-day expiry on SPY and Qs because I'm in and out of these trades so quickly, it doesn't matter. A lot of people say and claim that that is risky, but that's because their strategy doesn't align with the expiry that they're using. I treat these as simple day trades. I am looking for short-term opportunities based off of support or resistance, technicals, and I execute, and that's it. And I'm in and out of these quite quickly. So as it pops up, I'm going to pay myself, and I'm going to pay myself half. So I would get 5 contracts ready to sell. On the way up here, I will sell. Now, it says short right now, but don't worry about that. It would say sell at that time because obviously this isn't live. And I would click the sell button, and then I would have 5 left. If it keeps going, once it keeps popping up, it's coming into some other resistance areas. I'm paying myself into that resistance. So then maybe on that target, I'm going to load up another 3 and hit sell, leaving me with 2 left. So as it comes up, I pay myself 1 more, pay myself the last one into some acceptable target, whatever it is. And that's it. My position is now cleared. That's it, guys. That's all there is to it. So now let's clear this off. And even though it might be a little redundant, let's go over our puts. So remember, we wanted the 586 puts. So let's double click on that. It is loaded here. You can see up top, SPY 586 puts with today's expiry. Let's load in 10 contracts. And as it comes racing up into this 580, 556 level, I would simply hit, as it comes up, boom, as it's coming into that level, I hit buy. We're not shorting, so you don't hit sell first. We are buying puts. And we are, essentially, it's the same as shorting the stock. And then once it comes down, I would take off about half, hit sell. As it's coming down more, I am selling into technical support on the way down. Again, maybe I sell another 3, hit sell, and so on. Then that's it until you're out of contracts. That's all there is to it. And the reason why I'm doing this video is I get asked so many times. It's like, hey, can someone that doesn't know anything about options learn your strategy? Yes, my strategy, even though, and I know it can be confusing to some people, where it's like, oh, but you're trading options. I don't know anything about options. You don't need to know anything about options. This is the world's simplest and most consistent strategy you will ever see. Now, obviously, I'm not going through my full strategy here with you guys. This is just simply how to trade, day trade options. And this is how you do it. Now, some people will tell you that this won't work. And I was told that probably 7 years ago when I developed this strategy. I had everybody come out and say, it'll never work. It won't work. You can't trade options like that. So if you're watching this video and you're like, oh, I've seen lots of people trade options like this. Yes, now they do. Now they do. Before this, before I developed this strategy, nobody traded options like this. Everybody, all of the major traders out there, they all said it won't work. And now they trade a bastardized version of this because they still apply all of this and their strategy in with actual trading options. You don't need, as a day trader, guys, you have to hear me on this. I've been doing this a long time. You don't need the Greeks. That is typical dumb money trap that you're falling for. That's why options were developed, is to essentially take dumb money's money. options were originally developed as insurance policies. Let's say you're going long on a stock. So you would buy puts, you would buy the inverse on that. So if it starts coming down, it's a way to hedge your position. Okay. So if the stock where you went long breaks and it starts coming down, you would just sell puts. And that's it. You still are making money counteracting that loss in the stock. It's not what I do here. Options in the traditional sense are for investors. You guys aren't investors. You are day traders. That's why you're here. So you got to throw out all of that antiquated information and knowledge that you've come across, because it has nothing to do with day trading. This is why so many people struggle with day trading options, because they're still trading options like they're options. That's not what I'm doing here. So this is how you day trade options. And if you want to learn how to become a legitimate trader, come to tricktrades.com. I'm going to work closely with you, making sure that I get you to where you want to be. The full size up program and strategy is involved. I have an entry strategy, exit strategy, management strategy, risk strategy, and size strategy, all in one. And that's all included. So come to tricktrades.com. And if not, you want to continue to enjoy my free stuff, or maybe you just met me, that's great. Continue to enjoy my free YouTube channel and all of the information on here. There's a ton of videos on my channel. Go check them out. Make sure to like and subscribe, and we'll check you on the next one, folks. Adios.